Hey everyone, Niels Kostrup Larsen here again, bringing you another value-packed episode of our Best of Top Traders series, sharing small segments from the best episodes we've recorded over the years. Now, today's segment was from another conversation with trend-following legend Bill Dreiss, who explains how he defines risk, which I think you'll find very interesting and valuable. There were many other great parts of the conversation that you can listen to if you go to toptradersunplugged.com/94. With this short intro, let's jump right into the conversation with Bill Dreiss. Let's shift gear to a very important topic, namely risk management. How do you define risk? I know that you are not a big fan of standard deviation. so how do you define risk in your own methodology?
Well, I think again from my sort of philosophical position, I'm very suspicious of any kind of things like VAR or any kind of the standard risk metrics. I just think that risk is out there, and your worst drawdown's always in the future. And I think if you look back over time, you find again some pretty standard risk profiles. When you look at anybody who's been around for say 20 years or so, or maybe even 10, almost every one of those managers has had a major drawdown, by which I'd characterize as 50% or more, and usually just one, right? The people who've survived in this business are people who've been able to weather those, weather drawdowns without, losing their nerve. That's exactly it. And so that's where the risk comes in. The risk comes in, is your manager gonna lose it? That's where the ultimate risk. And if you believe that your guy's going to stay the course, then you should probably stay the course too.
I'm going to quote someone that you may be familiar with and who wrote a few years ago. It's David Dreiss, and he wrote a few years ago that here's an amazing thing about robust systems. The more robust a system, the more volatile it tends to be. This is because robust systems are not optimized to particular markets or market conditions. The converse is also true. You can design systems with excellent returns and low volatility on historical testing, but which work only for a given period or given market. These systems tend to be curve fit and market fit and not robust. Now, this is completely probably against what most people will feel, that robust systems are the ones that are more volatile, but I sense from our conversation today that's a conclusion you've come to as well.
Yeah, well, I know David, and he's right, and I think this is a conclusion that most people who've been in the business for a while would come to, and it's what I call. I mean, this is in contrast to perhaps the dominant quant paradigm, which is picking up nickels in front of a steamroller. In other words, you can design systems like long-term capital or whatever that can give you smooth returns for a while, but what those systems are doing, in my opinion, are what I call warehousing risk. So essentially, it's like, and I think it's the same sort of thing that Dave is talking about. You can design a system that essentially accumulates risk in some sense, and that when it finally breaks out, it happens in a big way, and this is of course what happened in the lead up to the financial crisis. You had all these people developing these securitizations and all these sorts of things, and they were just setting the system up for a major break. But in the short term, while that was going on, everybody was happy because everybody was making money, and the apparent risk was very low. That's what I think like a trend follower tends to do, is I'm essentially, how do you say this, taking risk on an ongoing basis. I'm realizing risk. I'm not warehousing it. I'm recognizing it and realizing it, and that's just part of the game. And I think any sort of viable long-term investment has to do that, because otherwise it's a disaster waiting to happen.
Sure. A lot of people say, you hear entrepreneurs talk about it all the time, that they learned a lot from the adverse time in their career and so on and so forth. What about drawdowns? What have you learned from your drawdowns? Maybe have you learned anything from the big drawdown you had more recently that was different to what you've seen before?
No. You have, there's two kinds of drawdowns. You said certainly there's the garden variety drawdown, which for me might be 20 to 30%. Sure. And that's just part of doing business. They're not pleasant. But on the other hand, and the problem is even the ordinary drawdowns are likely to cause anguish to your clients. Sure. But in terms of your system, these are pretty much, just part of the game. When you get what I call a catastrophic drawdown, say something 50% or greater, I think those are pretty rare. As I would say most, a trader might experience something like that once in 20 years or whatever. And so once again, it's just a matter of living through it when it happens. But in terms of my experience with that, no, I don't know. I suffered, but I didn't change anything. And as I say, the following year, I was up 85% or something. So to me, the existence of drawdowns, large or small, at least in my experience, have not had any particular bearing on, in other words, I don't use those as evidence that my system's not working, right, or that something needs to be fixed. And the reason for that is, as I say, I have this, I have this underlying faith, and I think faith is the only word for it, that markets will continue to exhibit persistence. That is, the trend following, is sort of a universal, or at least a persistent, if that's the word, behavior of the markets. And as I say, that's supported by the fact that the markets are subject to the fundamental economics that don't change.
And there you have it. If you enjoyed this short, insightful clip from a past episode of the show, then you will love the new free book that I'm giving away right now. It's called The Many Flavors of Trend Following and includes some of my best insights on this perhaps the most dependable and consistent yet often overlooked investment strategy. You can get a free copy at toptradersunplugged.com/book right now to start your own investment journey today. Just go to toptradersunplugged.com/book. And make sure to come back to the podcast or my YouTube channel next week for more exciting and engaging conversations.